I want us to look at that class we did about order flow. Some people did not quite understand it, so that is what I want us to look at today. And I see whether I'll also be able to answer some few questions, one or two. And I think we will be good for today. So especially those who are in the meeting, if you can hear me, please show me with a thumbs up before I just continue. If I am audible enough. Good. Now, those who were on my TikTok live, I promised that once I get to the class, I will show you what happened with this trade. We waited for this trade since it was, I think, almost here. Today is Wednesday. I think it was around 1 p.m. Kenyan time. It was around here. And finally it has activated me, and as you can see, it's playing out well. This is gold. It is playing out well. I'm expecting that these highs will be taken out. I'm really expecting, because this is where I'm supposed to take my ultimate sell. And what I am going to teach you is actually what I used to come up with this trade. Now, those who followed the live, I told you, because trading needs a lot of patience. Trading needs a lot of patience. So you don't buy or sell prematurely. And the reason I am still selling this market is because this market did not have any reason to sell from here. So I knew that this is inducement. I knew that this is inducement. And I knew that the market will later come back and take it out. So that is just a by the way. But let us look at order flow. We look at order flow and see what it really is and what we can learn today. So in case you have a question, just drop it on the chat box. I will be able to see it, and then I will reply accordingly. So we said that order flow is the footprints that the market leaves, or what we call the price action, as it is moving from one point to another. And so your work as a trader is to follow the footprints of the market makers, or the footprints of the those big traders, the banks, the hedge funds, and all that, so that you do not trade against them. So that is what we call order flow. Now, in order flow, you can start from the higher time frame, moving down to the lower time frame. And because I had done my analysis on gold, I think it will be better for us to even let you know how I have come up with this trade. If you look at the 4 hours, I had written something. I don't know whether it got lost. Let me, yeah, I have it here. So look at this. This is what I wrote. One, in the 4 hour, we are selling to a buy POI. We are selling to a buy POI, and this is the POI that we are selling to. So even if I am buying gold, I know that it is just for a moment. Once it gets to I believe this POI here where I have the risky sell, once it gets to this sell, I will sell it to this POI. Okay, now this is me building buyers for why I am trading the way I am trading. So I will sell up to this area here, because the market broke structure here, and every time the market breaks structure, it tends to come back and take the previous low or high, in this case this low, because this low did not take any liquidity. So this low is actually our liquidity. This low is our liquidity. So in the 1 hour, you can see that I had two scenarios. One is that the order flow sell or the risky sell. Now let me go to 1 hour. Those who are on TikTok, when I was doing this was my risky or the order flow sell. The order flow sell was here. No, I think it was because it was taken out. It was actually taken out. This was Tuesday. This was Wednesday. Yeah, I think the risky sell was somewhere here. I think it was here, and then I refined it in 15 minutes because it actually took me out. Yeah, here we go. It was actually here. So I used this using order flow. Now you can see it just took me out and continued to sell, but I had two entry criterias. I had the risky sell. You can see the risky sell, and then I had the order flow. So this was the order flow, this is the risky sell. The reason I have called it risky is because it is too close to the okay, I think I used the daily time frame to come up with that. Let me see. Please make sure you are not lost. I know my chart is a bit messy, but we'll see whether we'll have something. Yeah, the risky sell was the 50% of this week. You see all this long week, it is the 50% because the base was mitigated. Actually, the base has been mitigated now twice. The base has now been mitigated twice. So that is where I'm expecting gold to come to. That is why I am in this sell. I'm expecting that gold will come to this area, and then I can sell up to where I have the 4-hour order block. I can sell up to where I have the 4-hour order block. Okay, let me see what else I had written here. So if the market comes back to the week that mitigated QML, I'll take the buy. Okay, that one was taken out. If the market gets to our order flow POI, the QML will be invalidated. Once I get the ultimate sell, I can hold it to the 4-hour POI. So that is all. So you can see that when I am coming now to trade, because I took this trade in 5 minutes time frame, I know that based on the analysis I have done, this buy will hold. Now it's not a must because I'm not a market maker, but based on the technical analysis, this buy will hold until where I have shown you. Now, what is order flow? What is order flow? Allow me to just use another pair that is cleaner. because I don't want to, I've done my analysis on this. I don't want to remove everything. I don't want to remove everything. So let me use Bitcoin. Let me use Bitcoin. Now let's say let's come to the weekly. Now this is part of what we, or part of how we do top-down analysis. Top-down analysis. Now when you come to weekly, there are a few things you want to do. There are a few things you want to do. One is to mark what we call the market structure levels. You mark the market structure levels. You mark the market structure levels. I hope you can still hear me. I don't know why I feel like I'm lost. Are you still here? Are you still here? Show me with the thumbs up. Good, good, good. Now this is the weekly time frame. So what do? We mark the major resistance levels and the major market structure levels. There are 5 things you need to check when marking the major market structure levels. For those who will watch this later, let me just write it for you. 1, it must have acted as a support and resistance before. That is number 1. So if you are writing, you can write this. So this is how you mark. This is now the weekly time frame. This is how you mark your market structure levels. So it must have acted as a support and resistance before. Number 2, it must have caused a drastic move. It must have caused a drastic move. Number 3, okay, I see someone has written something here. So before you could redo the short note that you made for yourself again, the short note on codes that is done. Oh my god, I've already deleted it. I don't know whether this one you cannot redo, but don't worry, it is the same thing I am doing here. It's the same thing I am doing here. So it must have caused a drastic move. Then it must have multiple rejections. That is number 3. Number 4, you can mark what we call the turning points. Turning points or order blocks. Order blocks or supply zones, supply and demand. Supply and demand zones. And then the last thing, look for one that has been recently respected. So I'm explaining this now. Now, those are the 5 things you need to look at in the weekly time frame when you mark your zones. What that means is that I don't have to come here and see what is happening here. I have to just focus on the current price action. The current price action. Current price action. Now if you look at this, if you look at that area here, and I think the best thing is use a line chart so that you don't have a very crazy but of course you need to know that this is an okay. Let me use the rectangle tool. You see that area there? So I want you to see something. I I want you to see something. Market came here, it was rejected. It came again, it was rejected. It came again, it was rejected. Now this was resistance that now turned to support. All this, that is support, and it has a very strong multiple rejections, very strong multiple rejections. So that tells you that in the weekly time frame, that will be an area of interest. When the market comes here, you will be interested to know what will the market do next. I also want you to note that like in this case, this support that was broken now became a resistance. Now this this support or this resistance was broken. Okay, this support, because it was support, it supported this, it supported this. Now it will turn to resistance. That means you expect when the market comes here, we either continue pushing up, down, or if it breaks it, it will turn to support. If it comes and breaks, you will now wait for something like that. Now this is the weekly time frame. Of course, you cannot trade in the weekly time frame. So the only thing this is doing is to give you perspective of what will happen. So what we've marked here, it's a zone of interest. It's a zone of interest. I want you to also notice I also want you to notice what is happening around here, what is happening around this area. But with this, because now I know that the market is bullish. I know the market is bullish because it broke this structure. The market is bullish. So with that, I don't think I have anything else to do here. So I'll go to the daily time frame. I'll go to the daily time frame. And what will I be doing here? I want to understand something. The market broke this structure, okay, like that. And before the market broke that structure, it left this low here. And this low did not take any liquidity. So that tells me that in the near future, the market will come back and take out this low, because this low will be used as liquidity. So what do? In the daily time frame, I want to mark my levels now, which are a bit refined. I want to mark my levels which are a bit refined. Now if you look at this, the market took out this low and then did what? Broke structure. That tells you that this one is a strong low. This one is a strong low. Now I need to know, if the market comes back, where will the market come back to? How far will the market come back to? Now this is where we use order flow, because look at this, look at what is happening here. There's a lot of noise, so you don't know where the market will come to. You don't know the exact place the market will come to. So what do? I mark this area like that. You see all that area, I mark it like that. Then I will go to the lower time frame to refine my entry, because of course right now you cannot draw any order block here. There's a lot of noise here. There's a lot of noise. So let me go to 4 hours. Okay, where were we now? Okay, this is where we were. This is where we were. Now I'm in the 4 hour time frame. Now, what am I looking for? I'm looking at where we have FVG number one, and where we have order blocks. Where we have FVG and where we have order blocks. I'll also be looking at where we have major resistance levels. But even with that, the first thing I will want to mark is what we call the QML level, or the QM level. I hope we still remember what a QM is. Quasimodo. So if the market was in a downtrend and then it does something like this, so this is our Quasimodo level. Okay, all this is our Quasimodo level. So we expect that when the market comes back to that level, we will continue to push up. This is what we call a stop hunt, but just forget all those terminologies. Now, how do you come up with a Quasimodo level? You use the line chart. So you use the line chart and see, this is where you have your what? Your Quasimodo level. That is where you have your Quasimodo level. So you expect that when the market comes back to that level, you will be able to push this market upwards. That is the first stage. So whatever I am looking for must be within this level. You see where I have this order breaker block here, that breaker block here. But in most cases, the market must touch the Quasimodo level. Actually, in 99.9% of the cases, the market must touch the Quasimodo level. Now, if you check, it was mitigated by this, but still it did not touch our QML. So that means I am not interested with everything that is happening here. I'll now be interested with anything that is around this area. Now, what does that mean? That means that this becomes my inducement. That high, this low, becomes my inducement. And what can we see around this area? We can see this order block here, which was not mitigated. This order block which was not mitigated. So we can define that to that order block like that. We can do what? We can define that to that order block. So this is the 4-hour time. Of course, you are not trading the 4-hour time frame, but this gives you the overall bias. It gives you the overall bias. So what do you do when the market gets to your level here? You go to the lower time frame and look for a change of character. Okay, you go to the lower time. Let me go back to daily so that I push this as fast as I can. So when the market gets to this area here, what do? You will look for you will look for what? You will look for a change of character. So as you can see right now, the market is still bearish. So I need us to understand where this whatever is happening with this buy right now, it's all liquidity. It is all liquidity. And I'm suspecting that this market is coming to, we also have this major area of resistance here. You see this one? So the market can come here and continue pushing down because we expect it to come to this area here. This area here. Now, okay, let me go to the lower time frame and see how we can be part of this sale that is happening. This sale that should happen up to the QML. Up to the QML. So let's go to let's start with 4 hours. Okay, this is the 4 hours now. Now I am seeing something here. Now if you look at this, this market did not take any significant liquidity before moving upwards. That tells you that this is still a weak low. This low, it is still weak. It did not take any significant liquidity before moving up. So what I want us to understand is this move that happened here. This move that broke this structure. You see all this structure here? BOS, that's a BOS. So where did this move originate from? This move originated from this area here. Okay, this area from here. Let me show you. All this area there. Okay, what we do not want is the market to close above this. The market to close above this. Why? Because if it closes above this, that means that now we've changed character and we are now buying. We continue to buy. And if we are to continue to buy, where do we continue to buy to? To our weekly resistance area. Okay, to our weekly resistance area. Someone is asking, how do you identify an order block? Okay, I'll be showing you in a few. Now this is the issue I have with this. Now this did not take any significant liquidity before breaking structure. Didn't take any significant liquidity before breaking structure. What this tells me is that there is a possibility of this market buying until this area. Now that does not tell us that the market has changed or the market is now bullish in the higher time frame, because if you look at the daily time frame, this move started from here. So it still makes sense when the market comes to this area and then continues selling. I hope we are getting what I am saying. I hope you are getting. So let me go back to 4 hours. Now, where the market is right now, what am I supposed to do? What am I supposed to do? Now, what I'll do is go to 15 minutes time frame and look if the market has changed character here. If it has, that means I will continue to sell. If it hasn't, I will leave the market until it breaks above this area. Now this is the same analogy I was using on TikTok today when we were trading gold. This is what I was telling them. Now you don't just enter a trade because you've seen an order block. You need to enter with a confirmation. With a confirmation. Now let me go to 15 minutes and try to look at something. Now, okay, this is the 15 minutes. Now you see the market created this low, and actually, okay, let me show you something else that is a bit simpler. Using the line chart like that, I hope you are able to see. I hope this is not a distraction. You are able to see the line chart. TikTok people, why don't you push these likes to 2,000 likes? We are a lot of us here. Na mimi napea nyinyi masomo ya bure. Haya, look at this. Look at this, eh? The market came, created, let's start from here, this low, then created this high. Okay? You can see this is a high, this one here. Let me show you this one. I hope you can see that. So market created that high, then came and created this low, this one, and then created this high, that high. Now I'm using the line chart so that you understand it a bit easier. Created that high. So market created this low here, then created this high. Now what I did not want to see is the market coming below this low, because if you look at this, market took out this low, then did what? Broke structure there. Can you see that? Market it took out this low, then broke structure. What does that tell you? That tells you that this is a strong low, and you expect the market to continue going up without violating this low. Without violating this low. Let me go back to the chart and see. Now look at this, eh? This is the low we did not expect the market to take, and it was taken. So what does that tell you? That tells you that we are now bearish. We are now what? Bearish. We are now bearish. So we want to use the order flow. Let me use the order flow in 30 minutes first, or just 15. 15 is just okay. We want to use the order flow and be part of this sell. And remember, where are we selling to? Of course, I think you remember we drew something. We are selling to here. Okay? Oh my God. Are we together? Are we following? Who has been lost now? We are together. Good. We are selling up to where we have our daily demand zone. Or yeah, demand zone. That is demand zone. Now, this market took out this first. You see, there was this high that was taken out, then it broke structure. It broke structure. So before breaking structure, it created this high, and this high did not take any this high did not take any liquidity. So that means that this high is liquidity. So I have to look for a POI that is above this high. So what POI can you see? I can see an order block here. Can you see that order block? So market came and tapped inside that order block. Okay. Someone was asking me on TikTok, how do you identify an order block? This is one. A sell order block, or what we call a BOB, is the last buy before a significant sell. And we said again, I'll keep saying this until it sinks, that an order block must answer 3 questions. 1, does it have an FVG or fair value gap? 2, has it swept liquidity? Has it swept liquidity? 3 is, has it broken structure? So never forget this. So a valid order block must answer these three questions. Does it have an FVG? Has it swept liquidity? And has it broken structure? So this is our order block here. It took out this high, so it has swept liquidity. Number 2, it has this FVG. I hope we understand what FVG is, fair value gap. Number 3, it has broken structure. So that tells us that tells us that this is a valid order block, and the market came and tapped from this order block. Now this is what I was telling you, and this is how you understand order flow. Order flow dictates that the moment this order block was mitigated, it is now weak. It is now a weak order block. So money left from this order block and came to this order block. So this is the order block that has the money. So in any buying opportunity that is happening, it is happening towards this order block. This is the order block that has the money. And now you cannot trade an order block like this or this. You cannot trade like that. So what happens is that I will go to the lower time frame and look for an unmitigated order block, such that when this market gets to that order block, I can continue to sell. I can continue to sell. So what do I do? Let me go to 5 minutes. So in 5 minutes, I still cannot see anything because this is a very huge order block. Let me see what we have in 3 minutes. Now in 3 minutes, I can see something. I can see this order block here. I can see that order block here. And that order block, this order block, I need to go to 1 minute and understand if there is any FVG. If there is any FVG. Because this order block swept liquidity here. Okay. Sorry. Okay. Swept liquidity and broke structure. This is the order block that broke this structure here. There's a BOS here. That is the order block that broke that structure. So that tells you that this order block is very valid, but you also need to know whether it has FVG. I also want you to look at something, that this order block left this high that did not sweep any liquidity, and that is the high that the market is going to take. This is the high that the market is going to take. So what do? You move to the lower time frame in this minute. In this case, the 1 minute. Now look at this. Everything is now defined in 1 minute time frame. Everything is now defined. This high will be taken out because it did not take any liquidity. This high will be taken out because it did not take any liquidity. And what do you see here? You see a valid order block here. Can you see this? I'm sure you can see it. This green candle before this sell happened. And I want you to see that it has all this FVG and it is swept liquidity. So that tells you that this is a very strong high. And now that you're in 1 minute, you don't even need to wait for a change of character. You can enter aggressively. You can enter aggressively here. You know that you do not expect, okay, let me remove this so that we have a cleaner chart. You do not expect this market to go beyond this level. Why? The reason you do not expect that is because this is a strong high. This is a strong high. I also need you to know, let me see whether I'll see it in 5 minutes. Good. I want you also to take note of this, what we called the QML. Look at that accuracy. Where we have the QML is where we have the order block. And I told you that the QML must be touched. At least the market has to touch the QML before it leaves that place. Before it leaves that place. So that tells me that we have an entry. We have an entry and we have enough confluence. We have enough confluence to take this sell. So where do you hold this sell to? Okay, someone is asking what is a QML. Okay, let me explain in a few. Let me explain in a few. So this is what a QML is. I told you, let's assume we are in an uptrend and the market is doing something like this. But when the market gets here, it breaks that structure, then does something like this, breaks this previous low. Okay, so I hope you understand my illustration. This is an uptrend. This is an uptrend. So we expected that when the market gets here, it continues to move up. But instead of moving up, it closed below this previous strong low. Now, this is now no longer a break of market structure. This is what we call a stop hand. Okay? What is a stop hand? A stop hand is the market makers coming, because there are a lot of orders here. We have the people we call breakout traders, as retest what traders. There are a lot of traders. So there are a lot of orders here, and the orders that are here mostly are buy orders. Okay, so what does the market do? The market comes, activates the orders, and then it starts to go up. Now the people think that they are now in profits. Then the market takes them out. Now we had a lot of orders here. What orders were here? We had the sell stops, because traders believe that when the market comes below this strong low, the market will continue to sell. Now what happens when the market gets here? The market comes up again, triggering all these stop losses, and it comes to a QML. Now a QML is the level where we had the stop hand. It is the level where we had the stop hand. Now it comes there before now resuming the trade, and I will show you this right now on the charts. Now this is what we call the QML, or the Quasimodo level. Now some people call it head and shoulders. Can you see that? Head and shoulders. But I'm an SMC trader, so we call it what? We call it QML, QM level, Quasimodo. And Quasimodo is your head and two shoulders, but one shoulder is a bit down, because you realize that this one will be a bit down like this, because there is a breaker block here probably. Okay, by now I'm sure most of us know what a breaker block is. By now I think we know what a breaker block is. So this is what we call the Quasimodo level. So I hope you've understood what a Quasimodo is, or a QML. QML. Now that is what is happening here. That is what is happening here. Now you see the market took out this low, or let me just use this, that low there, and it broke structure here. There was a BOS. So you did not expect that the market will take this low. This low was a strong low, but it was taken. Can you see? It was taken here. It was taken there. So what happens is that you see where we have this candle that took out this, this that was taken by this becomes our QML. So if you use the line chart like that and then draw this where we have that exactly, I hope you are able to see. You see where we have that exactly. Before the market continues moving up, it has to tap the QML. It has to tap the QML. So look at what happened. The market came, tapped exactly. The accuracy is crazy. Look at that. Tapped where we have the QML before continuing up. Before all this move happened. Okay? Before all this move happened. Now, this was our what? This was our previous high. This was our previous high. So we expected that when the market taps to our QML, it will come and take out this high. But instead, the market came and took out the previous low. Then, after price action, the market came now and took out this high here. It took out this high. Now I want you to see at what caused that break of structure. What caused that? Let me remove this so that we have some clear chart. Now these are the moves that caused this break of market structure. If you look at the immediate price action, they did not take any liquidity before taking out this. So that means this was just a hunt for stop hunt. A hunt for buy stops. All the buy stops that were here, the market came, triggered them, and it moved up a bit so that these people will think that they are in profits, and then it came down. So this becomes our QML. So that tells me that the market must come to retest this area, because this was a huge area of interest. So that is why I drew this one here, and then it corresponded with our 1 minute order block, exactly where we have the order block. So that is what we call confluence. That is what we call confluence. That is what we call confluence. So the market will come back to this order block that has FVG, and it broke structure, and it took out liquidity. The liquidity that was taken out is what we call, or that area is what we call the QML. That is the area that we call the QML. Yeah, it also aligns with the supply zone. So those are a lot of confluences to tell you that this is a very strong area. This is a very strong area, and taking a sell from this area will not be a waste. It will not be a waste. Yeah, if you look at this, there was a lot of this is the fourth time maybe the market will react from that area. First time, second time, third time, maybe the fourth time. So that gives you a lot of confidence, so that now when you enter this market, you enter with a lot of confidence. A lot of confidence. So where do you put your take profit? Now remember, at the back of our mind, we know where this is going to. We know that this is going to the 4-hour order block. Was it 4 hour or daily? This order block, where we have this QML. So if you are a swing trader, you can hold this up to this area. If you are a swing trader, but me, I don't have that patience, because that can even take months or days. I don't have that patience. So for me, because I need quick money, let me see, 15 minutes. So for me, I would hold this up to that area there. Also because we have an order block here that can cause a retro what do we call it, reaction. So I will hold that in that area, and I will get a 7:1 comfortably. Now I want you to check what this price will do between now and tomorrow. I want you to check. I also need you to, when putting a stop loss, just put a little above, because the market can wick out this high. You see, just wick and then comes back. That is if you will not wait for confirmation entry. If you do aggressive entry like me, because me, I do aggressive entry without even thinking twice. I do it without even thinking twice. I do aggressive entry. Also, when you come to the higher time frame, this is the 15 minutes. We have another QML here. Let me use this. This is the 15 minutes time frame. Now, those who followed my TikTok live, I missed a trade because of this. I missed a gold. I had a trade on gold. I missed it because of this, waiting for the lower time frame QML to be hit, but it was not hit. But all the same, at least you know that this is where we have the order block. So we have every reason to wait for the market to come here. And then once it gets there, we expect this sell to now happen. Now, have we understood what order flow is now? Have we understood? Good. Perfect. So this will be a good place to put my sell limit. Like that. I'm not doing free analysis. I'm also using those analysis for myself. So, let me look for, okay, I want to look for another pair. See whether we can do something on it. This is GBP card. We have NZD. So let us look at this and try to use order flow just in 15 minutes and where we have the market currently. Now you can see that this market took out this low. This is the last example before I leave. Dan wants to be my students on TikTok. Just WhatsApp me. My number is on bio. WhatsApp me. We talk. Now the market did what? Took out that and then broke structure here. BOS. I've told you again and again and again that after every break of market structure, the market comes back and takes out at least the previous high, the previous low in this case, and this was the previous low that we had. If you use the line chart, you will be able to see it. Can you see it there? That was the previous low. So the market came and took it out, but I also need you to check out something so that you know what will happen in the future. Oh yeah, that was the discounted price. So we continue with this price action. So we have this that high, we have this low, then this was the next high. So this is our trading range from this point to this point. I hope you can see this point to this point. So I draw a gun box there, and you can see now this is where most traders mess. You see the market came and continue going up, and you see it broke internal structure. So someone would have come and maybe marked that as their order block, and you see the market came, tapped into it, and it bought a bit. It bought a bit because market makers must, they'll make you feel like you're making money. That is 12 pips. But then you are taken out because this low did not take any liquidity. It did not take any liquidity. So the market came, took out this previous low, took from this POI. This is what we called the psychology of the week. I don't know, I think we need to redo that class. The psychology of the week. So the week became the POI. Market took from it, continued running up. So we need to know, where are we currently? Currently, where are we and what do we expect? The market has broken structure here. The market has broken structure here, and then there was this grab of liquidity. So that tells you that this area is a very prime area for the market to come to. Very prime area. But now let me see whether there's like a small FVG here. Can you see this? There's like a small FVG here. So in a case like this, you go to the lower time frame and see whether you'll be able to see anything. Now this low here is liquidity. I hope you know why that low is liquidity. It's liquidity because this was the last low before the market broke structure, and this low did not take any liquidity. So that low by itself is liquidity. So what do? You look for a POI below that liquidity. I can see this one. You see this kabob here, but I want to use the QML like that, and it still comes to that. So that tells me that this is a very good area to continue buying this market. Very good area. This is what? This is NZD, to continue pushing the market up. So because of this FVG, you can push this to that area. I don't think it will be a lot of pips. Yeah, that is like 7 pips. And then you target that high. That is 32 pips. 32 pips. 32 pips. 32 pips. Now, I was not only teaching you, I was also giving you signals. So me, I have that trade. I have this trade still running. I'll just leave it as it is. This is gold still running, and then I have the Bitcoin trade, and actually it has activated me, by the way. It has activated me. So yeah, so with that, I am good for the day. I am good for the day, unless someone has a question. I think I am good for that day. Thank you, thank you, thank you, thank you, thank you. So I have a question here from TikTok. Should we always check the 4 hours before we enter a trade? It depends on which time. It depends on which trader are you. Are you what do we call them? Swing trader? Are you an intraday? But me, I'm an intraday, so I check the 4 hours time frame. So if you trade daily, the 4 hours will give you a good bias. If you trade daily, the 4 hours will give you a good bias. So yeah, thank you for joining. I'm 13 minutes late. 13 minutes late, but we continue tomorrow.